What's going on, guys? Let's take a little quick look at some of these setups using the 20 SMA, using a 5-minute time frame, and using some of those dynamic stop losses to kind of keep you guys protected, but also making you guys some money. So there's been some questions. When's the best time to take a 20 SMA play? When should I not take a 20 play? You know, maybe what differentiates a good setup from maybe a not so good setup? Well, again, you're never going to be truly right 100% of the time. So I think we all understand that. We all obviously understand we're going to lose some trades, but there's some things we can do to maybe stay out of harm's way a little bit more. So what I want to kind of show you guys here is, if you notice in the pre-market, we have this pre-market high, right? We're going to call this the previous swing high. Okay, so notice inside of pre-market we have a little bit of a low, we've got this little bit of a high, we've got what's called a range. Okay, so we've got a nice range here to open up the New York session. Now you're going to notice that we get a play, a setup to the long side. Okay, now when you get this setup to the long side, this one here off the open, you're going to notice that the next candle at 9:40 New York time confirms, immediately wicks you into the position, and then pulls back for 15 straight minutes. This would have stopped you out here. This would be a losing trade. How can we maybe avoid taking these losses? Well, if you believe in technical analysis and you believe in stocks are going to trade from supply to supply, demand to demand, that's the theory that I operate on. Well, we need to take out the previous area of supply. Okay, what's that? It's the previous swing high. So I would want to be a little bit more closer to this swing high, which is the pre-market, the most recent pre-market swing high, or I want to be trading over it, okay, before I take that next long position. Does that make sense? The same thing with the downside. Now you do get a setup here that does work. However, it immediately snaps back as well. Now this setup to the short side would have paid, okay? But if we are going to try to be a little bit more cautious and protectful of our money, then maybe we let this short play go too, okay? So we let the long trade go. We let the short trade go because we're still inside the range. Does that make sense? Here's your high. Here's your low. That's kind of a funny low. Here's your low. Here's your high. But notice here, notice this candle. This candle happens to close at 10 a.m. So right here at the 30-minute opening range as well. And then confirms. Now we took this trade inside of Evolution Traders today, and I was kind of walking some traders through it. If you put on any kind of size, maybe 2-3 mini contracts, more than likely you got stopped out, right? And you may be looking at this play and be like, wow, how would you get stopped out if the move essentially went straight up? Well, because from the point of entry to where this pulls back is around 20 points. Okay, so it's around 20 points. So if someone had a 10-point stop, if someone had a 15-point stop, more than likely you got stopped out. However, I played this with a few micro contracts, and I was telling everyone today, you know how I like starting my day? I like starting my day with a couple of micros. That way I can watch some price action, I can see some candlesticks print, I can see a couple setups, I can ease my way into the day. Because if I just start off with playing big size and mini contracts and I take a big loss, it just completely throws away the whole day for me. So I'll start the day with a handful of micros, give myself a bigger stop, kind of look at the whole body. And what I'm looking at in terms of the whole body is, where's that pre-market low, where's that previous swing low, where's that previous swing high, and how can I work myself into this trade so I could potentially catch a big move. Okay, so in this particular case, I did get into this trade, and now I wasn't looking, for some gigantic move, but what I'm looking for at around this time is around 20 to 25 points. And why is that? I'm using the ATR as kind of a guide as well as a gauge. So if the 5-minute average true range, okay, and this is an indicator you can put on almost all platforms. It's just average true range of the 5-minute candlesticks from swing high to low. I'll use it sometimes as a stop loss. I'll use it sometimes as an indicator to take profits. So in this particular case, when I'm looking to take this trade, we've got an ATR sitting at around 24, 25 points. If I get anywhere close to 20 points, 21 points, 22 points, I'm going to take profits. So on the handful of micros that I took around 20 points. It's not bad. It's $40 a micro contract, 40, 80, 120. That's about what I took on that first trade. But then there was also more setups. There was a continuation. There was also the 30-minute opening range. And then we had the initial balance as well. Once we broke out of that initial balance, kind of broke out, we held a little bit, chopped around, and it kind of faded up a little bit. So there was multiple trade setups that we could have taken. And again, those are some of the ones that I want to highlight. Later on in the day, we did have some beautiful short setups. But again, I want this to be a 1-2 hour workday for most. So if you're able to come in here and catch this trade to the long side, catch it. Ignore the trades if they're sitting underneath supply. Okay, ignore those trades. If you have like a little bit of a resistance area, just ignore it. Same thing with the short. If you're still kind of trapped in a range, anytime you're range bound, the 20 play is not going to be good. So you're looking to take these at the extreme. So either the extremes of the highs to break through or the extremes of the low to break through. Okay. Or if we are at the bottom of the range and let's say we're curling up and here's this, let's pretend that this yellow line is a 20. And let's say we're coming from the bottom of the range and we break the bottom of the range where potentially we can start curling up to the upside. So again, it's not going to do well when it's in the middle of a range. So if you notice you're in a range, a bigger range, by looking to the left of the chart, you kind of want to avoid that until we get to the top or the bottom extremes of that range so we can take them. I hope this makes sense. I'll see all of you guys on the next video. Again, if you guys want to join and trade with me, 24 access free to the Discord. Again, it's got all the courses in there. It's got all the videos. You can chat with us. You see everything that we're doing. 24 hours free, and then you guys can make your decision if you guys want to stay and join the team or not. If not, like, comment, and subscribe on this YouTube video, and I'll see all of you guys on the next one.